Ian, the prognosis for the oil market is even more dire than the crash we saw in 2014. Saudi Arabia is signaling it will flood the market after OPEC talks to keep production low fell apart. So we are looking at a price war here. This is coming to a head, of course, as the coronavirus is already pushing down demand. There are fewer trucks, planes, and ships moving products or passengers. On Friday, oil prices dropped more than 9% to $45.27 a barrel. Experts now forecast a further plunge down to $30 or worse in the coming days. And that's just for Brent crude, the global benchmark. If North American prices do fall as low as some expect, Canada's main benchmark, Western Canada Select, could trade for as little as $5 a barrel.
The bottom literally is falling out, and unless something is out there that would stabilize this, it looks like you could continue to see low prices for all commodities because of what I consider to be a real true double whammy on the markets.
So we know this is going to have an impact, Anita, on the supply and demand side. Let's start with what this means for consumers.
Well, Ian, you may have already noticed there's been a drop in gas prices this weekend across the country. A further drop of 8 to 9 cents is predicted tomorrow. But gas is only getting cheaper because the global economy is suffering, so it may not really be something to celebrate.
Because oil and gas are our number one exports, when you see the devaluation of those commodities and those products, you also have with it a weakness in the Canadian dollar. That has enormous implications for consumers because our purchasing power is really very much compromised when we see a devaluation of our most important exports. That means basically the cost of living goes up while we get less for that which we purchase.
This will likely be a very hard hit to Canada's resources, especially in provinces like Alberta and Saskatchewan. It's also bad news for manufacturing provinces like Quebec and Ontario. Ian?
All right, Anita, thank you.